Good afternoon, traders and investors. Will back here with another one, coming to you with a Tuesday market recap. Hope all of you had a very beautiful day of trading today. Now, in today's markets, guys, definitely a very stark contrast in relation to yesterday's price action, right? Yesterday, every single sector in the S&P was red, and today the complete opposite, guys. Every single sector in the S&P putting out some decent gains. So that October volatility, the October uncertainty still remains in the markets, but the bulls still do control the higher term timeframes. Now, in terms of our macro events today, guys, what led to the bullishness? Well, there's really two things that stood out to me. Number one had to be the Fed members speaking over the course of the day, and all of them were literally reiterating the exact same things, saying that the economy is most likely heading towards the soft landing scenario, and the fact that they are not concerned so much about economic output or the decaying of the jobs market in a relatively aggressive fashion. So that led to uphold today's gains for the most part. Now, piece of news number two that helped uphold the bullish sentiment in the markets today definitely has to be this article from coming out of the Jerusalem Post, and was obviously hitting other wires such as CNN and whatnot. Israel to refrain from attacking Iran's nuclear sites, focus on military targets and other targets instead, sources say, and these sources are from the Israeli military themselves, so they have to be somewhat quite reliable, right? Now, a lot of yesterday's negativity was due to a possible escalation between the Israel and Iran conflict, more specifically speculation surrounding whether or not they were going to attack Iran's nuclear sites, which is obviously a very steep escalation to the conflict and could lead to far greater problems than we have right now in the Middle East. So at least the fact that we got this headline today kind of pulled back on the worries in the Middle East. I would not dare to say that the conflict is anywhere close to being resolved, but what we do not want to see, guys, is a aggressive escalation of the conflict by targeting nuclear sites. That would be the worst case scenario, in my humble opinion. So those two things, this article coming out of Israel today, and obviously the Fed speakers today, all contributed to the bullish sentiment in the markets and helped keep up the gains for a majority of the day. So in today's video, guys, we're going to go through a few things together. Number one, we're going to cover this very interesting article that came out of China today. China stocks rally fizzles as the stimulus offer disappoints. So we'll go over the slight pullback in China stocks today. Is it a buying opportunity? Should we not be buying at all? I'll give my thoughts and estimates on the matter. And then piece of news number two, which we're going to cover later on in the video, has to do with NVIDIA's tech event, their AI event that's going on right now for the next 2 days, and has led to beautiful gains in NVIDIA stock over the last 2 days. So we're going to cover that when we cover NVIDIA stock in the later portion of the video, when we go through the company-specific technical analysis portion. Now, after we cover the two news articles, after we cover the China article, we're going to go through our major technical analysis rundown of our major market indexes, see how everything is shaping up, and then second, go through our large tech cap stocks in terms of the technical analysis too. And lastly, wrap it up with a glimpse into my portfolio for the trades made today and which ones I have ongoing throughout the rest of the week. So a lot to cover today, guys. Let's jump right into the action, shall we? So the SPY up a very healthy 0.95%, the QQQ's up a very healthy 1.5%, and you really had a good case of broad market rotation. A lot of the damage that was done yesterday was completely undone today. NVIDIA, AVGO leading the rally to the upside in semiconductors, big tech having a very good showing out today, consumer defensives coming back ever so slightly, financials not having the best day at all, but not a bad day, probably still sidelined because we have a lot of bank earnings coming up on the Friday session and next Tuesday as well. So I'm not really expecting the financial sector to move that much before we get those massive earnings. In other news, healthcare sector coming back after its multi-week declines, finally putting in a decent day of bullishness. And the bottom half of the market, the ones most exposed to interest rates, very, very, very mixed as a whole, guys. Still experiencing some form of pullbacks there. You can see that even best on the one-day relative, guys, led to the upside by tech and communication services. Communication services, I'll remind you, is largely just Google and Meta, but definitely the cell phone companies help, and Netflix helps as well in there too. Netflix had a beautiful day today. And to the downside, guys, you can see utilities, real estate, slightly weak because with the the yields are relatively high right now, especially in relation to where they were 2-3 weeks ago. And basic materials and energy largely coming down to the downside. Basic materials kind of intertwined with the China trade, and energy, of course. Well, when we have these types of headlines that the conflict in the Middle East is not escalating, well, that's when you see a pullback in oil. Oil's been a very hot trade over the last 1 week and now experiencing some form of a pullback. But all in all, guys, very happy with the market rotation, and the bulls do retain a lot of their control. So before we get into more technical analysis, guys, let us briefly cover what exactly happened to China today. If you want me to pull up my list of the top plays that I look for every day, you will see that most of the red today was all China names. BYD, 9.5% down. Li Auto, 8. Baidu, 7.5. Baba, down 7. Pinduoduo, down a lot. Win, right? Caesars, which is also exposed to those China stock trades. So a lot of the China names, guys, coming down significantly, which led to the Hang Seng Index, your index from Hong Kong, down 9.5% on the day. That is a contrast to the Shanghai 300 Index, which is mainland China. That one was up about 6% on the day. Now, this one, guys, the reason between the discrepancy is all of your big tech companies in China, most of them are listed on the Hang Seng, and a lot of the weighting, similar to the S&P 500, is in a lot of those high-flying tech companies as a whole, which is why they had more of an impact on the Hang Seng today. The CSI 300, you'll find a lot more real estate companies, a lot more industrial and commercial companies in this index as a whole, and your tech companies have a less of a weighting. So those did well today on the stimulus news. The other ones that did not do so well is some of the high-flying tech names. So that's one of the reasons for the discrepancy. You can dive a lot deeper than that, of course, guys. I'm just giving you the quickest and briefest summary that I can. So let's dive into the article. China stock rally fizzles as the stimulus offer disappoints. Let's have a look. Economic planner chairman Zhang Shanxie told reporters China was fully confident of achieving economic targets for 2024 and would pull forward 200 billion yuan, roughly $28.36 billion, from next year's budget to spend on investment projects and support local governments now. But his failure to detail sufficiently big or new measures rekindled market doubts about Beijing's commitment to ensuring the world's second-largest economy can climb out of its most serious slump since the global pandemic and reach 5% growth. Essentially what it means, the stimulus offer was good, but not good enough. Not what people were anticipating. Analysts wanted a lot more. They wanted closer to 40 to 50 billion in stimulus right now. Let's move on further. Ultimately, for the rally to be sustainable, we need to see more fiscal policy and more measures to support the economy and the property market. A great deal of hope has been built into the strong rally in recent weeks, and we now need to see additional government policy action to support the uptrend. So the stimulus is there, guys, but it's just not enough, and which is why you've seen a massive pullback in China stocks. That's as far as we're going to go in the article, guys. In terms of how I want to play this one, guys, we know that these companies have ran an absolute ton, but we also know, for the most part, the PEG ratios, the growth ratios of these companies are absolutely fantastic. A lot of these big tech companies, such as Baidu, Alibaba, Pinduoduo, are some of my favorites. They have huge cash reserves. They're growing EPS very nicely. Their free cash flow yields are amazing. And even though these stocks have rallied an absolute ton from the bottom, 40% in some cases, right? They're still representing some decent opportunities, but I want to find them on a pullback. We know that we were coming out of very, very, very hot daily overbought conditions, and now it is time for the pullback on the daily. So if we see a little bit of weekly weakness here, coming back and testing some of the large support areas that we blasted through, Alibaba, if we retest lower in the lower 100s, high 90s, I could be tempted to make a little bit of a dip opportunity play on these names, but obviously we are betting on the longer term recovery of the Chinese economy, right? Not really looking for the super volatile, quick snipe swing trades, more looking to build somewhat of a longer duration position in some of these companies, but I need to see more of a pullback. So if today sparks maybe a 1 to 2 week pullback in a lot of these names, until we get more data, more stimulus packages out of China, I would not be opposed to playing the pullback, but I need to see more, guys. I need to see at least another roughly 10% on most of these names just because they've ran so much. So hopefully that makes sense in terms of how I'm trying to position for the upcoming China trade. Now, moving into our technical analysis portion of the video, guys, let's have a look at SPY, and we will see that really not much has changed at all. Everything is still looking very healthy because even with yesterday's price action, you remember in yesterday's video, I was saying we did not break any major levels. So this looks quite choppy here on the S&P on the actual SPY chart, but if you use the futures chart, you will see that it paints a much better picture. You can see the clear daily uptrends in formation right now, clear daily higher lows, and now the bulls potentially looking to attack the all-time highs on the SPY. So we'll take it back to the SPY chart. The daily higher lows are right here, 566, guys. Keep a close watch on this because if we do not make a new all-time high and just fail and flush, that would be a daily downtrend, and at that point you'd be looking for a little bit further weekly pullback, right? We know we're in a very beautiful weekly uptrend, and at that point we'd just be looking for the weekly higher lows for possible further trend continuation. So keep an eye on this big support level below us, guys. 563 down to about 560 should be the next big area of support. That is your prior all-time highs. But all in all, guys, the bulls are looking good right now. This, in my humble opinion, you see it best on the futures. This is a bull flag, a longer duration bull flag, and it points to bullish follow through. Why? Because the bulls control all the higher time frames. They control the monthly, they control the weekly as well. So it stands to argue when we consolidate here above a big level of previous resistance, which is now support, and we don't lose any major levels, the bulls are trying to protect this move as best as they can, and we should have a bullish lean into some follow through to the upside. So hopefully that makes sense for SPY. In terms of the QQQs, largely the same analysis. Beautiful daily uptrend, daily higher lows are set, and now we are looking to fulfill the prophecy for the QQQ expansion, returning towards the all-time highs. The weeklies also looking quite bullish, which is why we have a bullish lean on the daily charts as well, because the bulls control all the higher time frames, guys. Monthly, full bull control right now. The weekly, full bull control as well. So keep an eye on the daily, guys. This level right here would confirm the next leg of daily uptrend, and then your resistance would literally be the all-time highs. In the event we break the daily higher lows, 478, then watch out below, guys. Daily downtrend would be underway, and we would embark on some weekly consolidation. But keep an eye, guys. The bulls have tons of space. Anything above 448, just looking for a weekly higher low for further trend continuation. But as of right now, there is no red flags on the shorter term timeframes. So keep your eyes peeled for those very crucial levels. Moving on to financials right now. Financials not looking too bad, 0.58% to the upside, but still fairly muted, right? We know that there's huge earnings coming out on the Friday session and next Tuesday as well. So I'd be very surprised, guys, if we get either a break of the all-time highs prior to those earnings or a break of these significant daily higher lows right here down at about 44.67. So keep your eyes peeled on these two levels. I would not be surprised if for the remainder of the week, we remain kind of range bound between these two levels as we kind of wait in anticipation for those earnings. But as of right now, guys, no major red flags, right? This is just a massive, massive, massive tightening range. We know the bulls control somewhat of a short duration daily uptrend right now. They're looking for a daily higher low. Anything above this guy right here, 44.62, is just a daily higher low for further uptrend follow through. And on the weekly, you can see that as well, right? This, for all intents and purposes, is a decent looking bull flag, but it's all going to be predicated on having at least somewhat neutral or bullish earnings, right? If earnings are really not well received by the market, which would be surprising, right? I'm pretty sure all of these banks are going to guide for higher net interest income as rates are coming down. Usually that favors the banking sector as a whole. So I would not be surprised once again if we do have somewhat of a bullish bias lean coming into financials at least over the next 3 to 4 months. So the charts do look good for some follow through, but be mindful if we break this one down here, we would lose the daily uptrend. We would lose some of that weekly bull flag, and we'd just be looking for a weekly higher low. Anything above 43.57 is going to be that weekly higher low, right? Now moving into healthcare. Healthcare finally getting 1 day's worth of a bounce. But is 1 day worth of a bounce enough to change the trend, guys? No, right? We are still in a big daily downtrend. Nice to see the daily bounce underway right now. We were getting somewhat very cheap on the RSI in terms of not quite oversold, but the RSI was getting down there on the daily, right? You can see what we were looking for, hourly uptrend shift, and the bulls are trying to get that done. A break of today's high into tomorrow will really give us that hourly uptrend and give us that daily bounce confirmation underway. At that point, you guys know the rules, right? Looking for at least a 618 bounce. If the healthcare sector can bounce at least to about 153, it creates enough space for the bulls to maybe go on for the two-step recovery process of the daily uptrend. That, of course, is if they don't just completely V-shape it, right? So always two ways of doing it, either the full V-shape, breakout, retest, and reset into a daily uptrend, or the two-step process, give me a good sized bounce, set the daily higher lows, and reset the daily uptrends. That way, only when we have the daily uptrends, guys, can we confirm that the weekly lows are set, because now we know we are still in a weekly downtrend and still in short form monthly consolidation. But look at these long-term charts, guys. Looking very good on healthcare as a whole. I would not be too worried for the sector at all. It's just consolidating. It led the move higher, guys, when there was that rotation from, tech and growth over to defensives at the end of the month of July through August. And now they're just taking a well-deserved breather. So nothing truly big in terms of red flags on the higher term timeframes. Moving into semiconductors right now, 1.73% to the upside, looking quite good. I mean, we never lost daily uptrend, right? Big pullback out of this resistance area, which we're attacking now for the second time, 257 down to about 248. They set the higher lows right here, 237.06. So daily uptrend simply continues. We'll be looking to attack the 256, break 256, the daily uptrend simply continues. And then we're going to be looking for one of my favorite trades, guys, the breakout of this resistance area, breakout, retest, and run. This could be a very decent trade opportunity if it presents itself to us. And in the event we get rejected right here, guys, well, the bulls need to protect this location right there, 236. At least we need to hold a tightening range between these two areas, support below us and resistance above, right? So we know that we have a lot of semiconductor earnings coming up, guys, in the next 2-3 weeks worth of time. So maybe even the semiconductor index, guys, probably not going to be flying to the all-time highs before those earnings. The best thing the bulls can do is protect these lower areas right here, because if we lose them into a daily downtrend, that's just going to set us up into furtherance of this weekly tightening range. Still have not closed a weekly candle above the 255, so we still cannot say that we have the weekly uptrend in the bag just yet. So in the event we lose these areas and consolidate a little bit more, still not looking too bad for somewhat of a tightening range. Moving into the IWM right now, IWM not performing too bad, right? 0.07% to the upside. But as I've said, guys, the one thing that the Russell does not like is market uncertainty. For this one to truly run the way that everybody wants to, you need to remove a lot of the uncertainty from the table. You need to remove the Middle Eastern conflict. You need to remove the election uncertainty. You need to remove the recession uncertainty and everything in between, right? Earnings cycle uncertainty too. This one really needs the green light that everything is okay, and only then will institutions be comfortable positioning large amounts of capital into the risk on trade. As per now, we are still caught in this daily downtrend. The bulls are trying to reverse, but still no sign of that. We would need a break of the last Thursday's high. That would give us the daily uptrend. That would give us confirmation that the weekly higher lows are set, and we may be looking to establish a weekly uptrend and attack this overhead resistance of 225, 230. But as of now, the sector remains still a little bit muted. You guys know where I like this one. I like this one, 210 down to about 208. Now, lastly, moving into the Dow Jones. Dow Jones not looking too bad, about 0.3% to the upside. Still protecting these lows, guys. 41,878 roughly, right? Even though I gave you the dollar amount. So the daily uptrend is not looking too bad at all, right? We are protecting the equal lows and kind of just range bound at the top. What does this look like, guys? Looks exactly like the S&P 500, right? So I wouldn't be too nervous unless we lose the area that we back tested again, right? 1, 2, 3, 4, 5 touches right now. If we lose this area without setting a new all-time high, you guys know daily downtrend is underway, and then we'll just be looking for further weekly consolidation. But look at this chart. The bulls have it, right? Beautiful weekly uptrend. We'd just be looking for a weekly higher low for possible further trend continuation. And if that's the case, if we do break down below, guys, target the 12 EMA and the confluence with our previous all-time highs. This green box is looking quite good. And once again, that's 41.3 down to about 41,000 for that area of confluence for a little bit of a retest and possibly run for the Dow Jones. So no red flags in terms of the short-term price action either, right? So that's pretty much everything in terms of our index rundown. In terms of the yields, well, yields maybe achieving a short-term top, right? We know that the yields on the 20-year have been, hitting overbought conditions on the RSI levels, and that doesn't happen too often. Usually when it does happen, it's not NVIDIA, right? This was the crazy speculation rally of late 2023 when people were worried about inflation having a resurgence. So I wouldn't, this one is kind of an anomaly for now, but in terms of normal price action, right? When we have a little bit of speculation, but a little bit of hard data as well. Usually you don't get too overbought on the RSI. So when it's coming up into the, roughly 70 levels, you know that we might be approaching a temporary top. And this green line right here on the 20-year is the 200-day moving average. On the 10-year, just the same, right? Very overbought conditions as of late, coming to the 200. So it may just be the time that the yields are temporarily topping out after the speculation rally, after the Federal Reserve actually cut interest rates, because now we have a repricing towards the soft landing scenario. But I do believe long-term, guys, these yields are going to be in a monthly downtrend for a considerable amount of time in the future, right? Even the 20-year setting up for the monthly downtrend, just setting up for the monthly lower highs right now into lower lows. No choice. This one will come down. The only thing that can possibly affect this trade coming lower into, that would be TLT higher, right? The only thing that could possibly affect this trade actually working out and moving higher would be a significant resurgence in inflation to where the Federal Reserve would have to pause the rate cut cycle, right? And no one's really expecting that right now. That's maybe like a 5% scenario probabilities at best. It is obviously always possible, but not very likely in my humble opinion. Moving into gold, let's touch gold and oil ever so slightly. So gold establishing the first daily downtrend in quite some time right now, guys, losing the 12 EMA, which is known as your short-term momentum guide. So possibly embarking on its first weekly consolidation cycle in roughly the past 4 or 5 weeks. But we know gold does this, right? Still a beautiful weekly uptrend, possibly just looking for a weekly higher low for further trend expansion. I'd be looking in the lower, maybe mid 2500s for confluence with the weekly 12 EMA. So if gold, we were coming off very hot RSI levels as well on the weekly. So if we do consolidate, gold comes down usually when we get better data out of the economy. Gold is a fear trade. Never forget that, right? So when we remove fear, when equities rally like they do today, well, it's normal that gold kind of takes the other side and consolidates a little bit. But I still do like this one. If we retouch maybe the 2550 range, I could be interested because that would be the classic breakout retest of the 12 EMA and slight previous resistance, which is now support and possibly run. So 2575, 2550, I will reevaluate that trade. And we have to talk about oil, of course, guys. When oil was down here the last couple of weeks, you may remember me saying oil will probably revert to the $75 median price that it's been having, for roughly the past 2 years. And that's not, and that was really exactly the trade that was executed perfectly, right? But we know now weekly uptrend is underway. But we also know that a lot of this was due to the escalating geopolitical tensions in the Middle East. So now that we have one news article telling us that maybe the conflict is not reaching new highs, right? They're not pushing it higher and higher and higher. It's just staying at the level which it is right now, which is still terrible, right? It's still very, very bad what's going on. It's just the way markets respond, right? It's they price in what's happening currently, and anything worse is not yet priced in, right? So yesterday we were kind of pricing in the worst case scenario, and today that was kind of relieved when Israel said that they were most likely not targeting Iran's nuclear facilities. So oil coming down, we know that the short-term timeframes, guys, were overbought on the 4-hour and deeply overbought on the 1-hour coming into the peak as well. So a little bit of a reversion, right? The bulls still control the daily. A lot of space, guys, to set up for the daily higher lows for possible daily trend continuation. I would not be surprised if oil kind of finds a consolidation level here, maybe roughly between the $73 and $76, maybe over the next month or two, even the next couple of weeks. I would not be surprised. So the oil trade was nice off the bottoms, but don't get too greedy thinking that the price of oil is going to go to 9,100, guys. It's probably not going to happen. Probably hesitate around here between 80 and, roughly 80 and $72, let's call it. So that's pretty much the fact of the matter for oil. Let's take a look at Bitcoin real quick too. So Bitcoin not looking too bad. We know what we're looking for, right? Well, what the bulls have to do is protect this weekly. It's best viewed on the weekly, right? We know, I've said this a few times on the channel. Look, we had one engulfing move in the past, but it rolled over. This was a 100% engulfing move. Wasn't enough, we rolled over. Then we had somewhat of a 80-90% retracement move. Wasn't good enough. Then we got somewhat of a 60-65% retracement. I'm doing this visually, but you can check it on the fibs, right? About 65%. So I'm not too far off, even though I use the visuals. This one right here is a more than 100% engulfing move. First time that it's happened. Big time engulfing move right here. And what are we doing right now? We're retesting. We're trying to set up the weekly higher lows for possible weekly trend recapture by the bulls. but we're reacting very nicely down here. Lower end of support, 62,000, roughly down to about 60,000. You see the level best on the daily. A lot of confluence here with our moving averages. The 200 is right down here at 60. So this weekly consolidation is what we're looking to put an end to. But for that, the bulls need to set up the daily higher lows and reestablish the daily uptrend. We had a very nice push yesterday, but now they have to play some defense. Give me the higher lows, push to higher highs. Perfect. We have the daily uptrend. We know that the weekly higher lows are most likely set, and then we are going for a leg of weekly trend expansion. I'm going to give the benefit of the doubt on this one, guys, to the bulls. I love playing Bitcoin. I've been playing Bitcoin a couple times down here, and if it retests this area right here, I will possibly be positioning for some longs because the risk reward is worth it, right? Where's the stop loss? The stop loss is here, 59,850, and then our take profit starts at about 66. So that's a decent amount of R&R, right? Not too bad at all if we take it a bit lower, right? We're only risking the risk to reward metric at this point, right? We're almost looking at a 2-to-1 risk to reward. So I like that risk reward profile for Bitcoin. So not looking too bad at all in my humble opinion. Now, let's move into some of our big tech names, shall we? So Apple recovering ever so slightly today. Well, a decent push by Apple, 1.84%. Not looking too bad, but still very, very, very messy, right? Once again, trapped in the 227 to 223 location. This one is best viewed on the weekly, right? Simply just a massive weekly tightening range until we get a break in one or other direction, either down to the 214 or higher up to roughly the 232. We can't say that Apple is in any specific trend whatsoever, just sideways consolidation. And those are the types of ranges that I don't really like playing for some short-term swing trades, right? A break, of course, of 233 will give the bulls the long-term weekly uptrend that they've been fighting for the last 2 months. And a break down below here would give the bears the weekly downtrend and monthly consolidation that a lot of people, including myself, are kind of waiting for to build further positions on Apple, possibly down to the 205, 200. So as of now, right now on Apple for me, there is no trade. There's not much risk to reward, guys. It's kind of equidistant, right? The stop losses go below here. The take profits go up above here. There's not much risk reward to be had on this stock whatsoever. Couple that with the fact that the valuation right now is relatively expensive. I don't even like adding it to the long-term portfolio up here. So Apple for me right now is a no trade and also a hold for the long-term portfolio. Now, moving into AMD stock, AMD having a decent day, but not as good as some people might have estimated. I would have hoped that AMD, on a day where NVIDIA is up 4% and the entire market is absolutely ripping, I would have loved AMD to come out with a 3-4% day of their own, but I can't complain, guys, because the bulls are in full control of this chart. Beautiful, beautiful daily uptrend expansion right now. Daily higher lows are here, 158.63. As soon as this move is topped out, we'll be looking for another daily higher low for further daily trend continuation. And the next area that we're targeting, guys, almost have the gap fill. Gap fill is 177, and then area of resistance, of course, 180. And 180 has come up a few times in the past, guys, right? Not only here, but also back here and back here a few times as well. So 180 is a hotly contested area. I do believe that's the next area that we pull in for the weekly leg, right? And look at this weekly uptrend. No red flags whatsoever. Even if AMD, guys, rolls over, gives up the daily uptrend, what are we looking for here? Simply looking for a weekly higher low for further trend continuation. And trust me, if we get 2 weeks of pullback on AMD and retest the bottom range, this red box that we just pulled out of, you guys know what that trade is. One of my favorite trades, breakout, retest, and run. I'll be sitting here for a quite heavy position on AMD if they do give me the opportunity. Moving into Amazon right now, 1% to the upside. Amazon reacting quite nicely from the area of support that we were targeting, right? Roughly the 180 down to about 178. Not quite getting there before the bulls putting in a nice reaction. So Amazon right now, daily downtrend is in motion, and we'll be watching. Can they engulf the most recent second leg of selling? Well, you need to engulf all the way up to about 188. If they get that done, daily downtrend is finished. And then looky here, we have our weekly higher lows. Beautiful weekly uptrend. Looking for the weekly higher lows. Key points, right? 180, 178. That's why this area is so important. I only put the little yellow lines here, but you can extend them over into this area. Hotly contested area for Amazon stock. Looking very good for the eventual trend recapture by the bulls. Look at this weekly MACD as well, right? Very weak since the early portion of August. And now they're trying. They're trying to turn this one around. So Amazon, I will maintain. I love it. I've been playing some short puts aggressively at the 180 area, and I've even loaded up a bullish long position that I'll show you guys towards the end of the video in my portfolio. So I love, love, love Amazon down here, guys. And if for ever which reason we breach, fall below, well, I'll be shopping down here again. 175, that is where I start loading up with some leap call options. So I'll keep you guys posted. Moving on to Google right now. Google with a nice day to the upside, 0.8%, looking quite decent, right? Daily uptrend in motion. And now we kind of gave it all back, right? So that was a beautiful daily uptrend. And now look at this. Short-term daily downtrend. Keep an eye on the 162 level, guys. I still think this one is a decent buying opportunity, especially after yesterday's red, but I'll be playing it with short puts. I love the 162.5 level for short puts, or even a little bit lower towards the 200-day moving average around the 160 mark. I think this one is such easy money, guys. It's Google, right? They're not going anywhere. They have one of the lowest valuations in all of big tech right now, and the longer-term timeframes look absolutely fantastic. No problems here. Beautiful monthly uptrend, looking for the monthly higher lows for further trend continuation. I truly believe, guys, that Google is easy, easy, easy money. My price target for Google over the next year is all the way up here at about the $200 range, and you'll see that most analysts do indeed agree as well. All of the price targets are currently above the current stock price, right? So don't take it from me, take it from roughly the, what is this? Like 65 analysts that are covering the stock. Beautiful EPS expansion, beautiful revenue expansion. This one is, I'll just, not financial advice, but for me, it's free money. We'll see if I'm proven wrong or not, right? So I love this one, guys. If we have a little bit more downside, you guys know the drill, right? Weekly down trend is in motion right now, but we did have a 100% engulfing move. So if anything, even if we do give up these daily levels a little bit more and some further downside is seen in Google, we'll be looking for a weekly higher low for further trend continuation. And trust me, if we come back in the low or mid 150s right here, I'll be adding another leap call to the portfolio and go shopping big time for some Google. But right now, I like it for some short puts. Moving into Meta right now, Meta up about 1.39%. Beautiful showing by Meta as well. Still trying to attack that $600 of psychological resistance, but no red flags, guys. The bulls, massive control. Beautiful daily uptrend right now. Any further pullbacks, we'll still be looking for a daily higher low. Anything above 550, 546, looking for the daily higher low for further trend continuation. And even if the Meta bulls give it all back, daily downtrend rollover, you guys know the drill. Zoom out. When in doubt, zoom out, right? Take a look at the weekly. Are there any red flags on this weekly chart? You'd just be looking for a weekly higher low for further trend continuation. And trust me, if we pull back, guys, into the 540, 535 area and back test this, one of my favorite trades again, right? Breakout, retest, the weekly 12 EMA is there. The prior all-time highs are there. I will be going in for a relatively heavy position on Meta for some continuation through the end of 2024, through 2025. The valuation of this company, even at 600, guys, is still relatively cheap, right? I can do it right now. You guys want me to do it right now? So let's do it right now. Let's redo these. The numbers are all the same. We'll get some updated numbers at the earnings cycle right here. So let's go for the 2024 EPS. So let's pull up the 2024 EPS. 2024 EPS is 21.32. So they revised it to the upside. So 21.32. Let's do the valuation at 600, right? So in terms of the EPS growth rate, should be maintained roughly the same 20% per year. So just we do 600 divided by your forward 21.32 gives them a forward PE of 28.1, right? So 28.1, you might say, yeah, but Will, that's a little bit high. For Meta, it's really not. Forward P under 30 for Meta is pretty good. Divide this by their EPS growth rate of 20. Meta is sitting at a 1.4 peg, guys. A 1.4 peg. That's still very good value, right? Very. I'll leave this cheap sign right here just so you guys can know. So if we pull back, it'll get even cheaper, even better deal. Moving on to Microsoft. So Microsoft looking very, very good right now. Beautiful recovery rally, touching the 12 EMA, and the bulls saying, no, that's pretty much enough for us, right? So we know that Microsoft's been in a daily downtrend, but what were we looking to do? Still looking to set up for the weekly higher low for further trend continuation. So Microsoft was not able to break and close above the upside resistance, right? This whole 435 to 425 has been challenging for the bulls, not only recently, but a couple times throughout the year, right? This area has been somewhat problematic. So now the bulls are looking for a second or third attempt, depending on how you look at it, to kind of challenge this area. Fundamentals of the company are beautiful. And I do believe, guys, down here, if you're looking to build some Microsoft for a long-term portfolio, I see no problem with buying the stock right here. Not financial advice. I'm saying just what I am doing. I see no problem for myself to be buying the stock right here. right? And coming off the 200 daily moving average, very nice. And how do you know this daily move down is finished, guys? Just look at the 1 hour time frame, right? 1 hour now in the uptrend, looking good. Hourly oversold conditions were met yesterday, so it was a good dip buying opportunity. So now we have the hourly uptrend back. We'll be looking for the size of the bounce, right? Two ways of getting out of this daily downtrend. Number one is the complete V shape, which is the unlikely scenario. Such a violent move down. Highly unlikely that Microsoft just blasts through this resistance area like it's not even there, right? The more likely scenario is we put in a 50-60% rally, get rejected by the resistance, reset for a daily higher low, and try and attack it once more. So I'll be looking for that situation over the next 2 weeks on Microsoft. And in the event we continue with the downward motion into 400 to 395, I think you guys know my opinion. Every single time Microsoft has come down in here over the course of the entire year, I have bought and made a decent amount of profit. That would be a 15-16% decline on Microsoft from the highs. And usually you go back in history, unless in the context of an overall bear market and interest rate hiking cycle like 2022, any 15% pullbacks in Microsoft's history have usually been a very decent opportunity to buy the stock. Now, moving into Netflix. Netflix with a glorious day today, almost 3%. They actually hit 3% midway through the day here, almost 725. No red flags on this chart whatsoever. Beautiful daily uptrend right now, establishing some daily higher lows and going for it, right? Equal lows right here. So we can say at this point, any pullbacks, guys, will just be for some tightening up of this range. For all intents and purposes, it really looks like, a daily bull flag, right? Consolidation above the previous all-time high support level, which is 700 down to roughly 675. The bull's not giving back too much and really looking for the expansion of this weekly trend. Keep in mind your next area of resistance, guys, has to be the 750 psychological, but also keep in mind the earnings are coming up soon, next Thursday, as a matter of fact. So I'd be highly surprised if Netflix really goes on a monster rally up or gets an absolute flush to the downside. If anything, we just might be looking for possibly a grind higher on Netflix if the overall markets continue green, but I'm not expecting it to go on like a 5-10% rally much before earnings. But as of right now, no red flags, but looking good for some continuation in this stock. I'll be waiting for earnings to position myself further into Netflix. Moving into NVIDIA right now, 4% of upside today, and NVIDIA really had a beautiful presentation today. I highly suggest that you watch possibly a 10 to 15 minute recap by one of the tech channels on YouTube. Not so much the context of the channel right now, but I will present to you guys the one thing that kind of stood out to me from NVIDIA's tech presentation today. So they announced 7 tech announcements in their Washington, D.C. event. The event will last through the Thursday session as well. So here's what Jensen Huang had to say. AI is driving transformation and shaping the future of global industries. In collaboration with US companies, universities, and government agencies, NVIDIA will help advance AI adoption to boost productivity and drive economic growth. Jensen never fails in pumping the AI industry and pumping the GPU industry, the data center industry, and all industries in between, right? But today was definitely a milestone in NVIDIA's attempt okay, let me set the context, right? The NVIDIA boom that's been happening as of recently has to do with hardware and infrastructure. It is the data center build out, right? But what is going to be once all of that infrastructure has been built out, once everybody has their Blackwell GPUs, once most of the data centers have been ramped and whatnot, what is NVIDIA going to do? Is it going to become a product refresh cycle like Apple has right now, where every 2 years people just buy the new GPUs coming out of NVIDIA? Or is it going to be something more? Well, you guys know NVIDIA obviously has its eyes set on the moon right now. They want to do more. And there's been a lot of talk about NVIDIA attacking the software industry, right? Not only providing the hardware solutions, but also software solutions that can be used and integrated into their GPUs, right? Because they know how to best use their own processing power. So they're really starting to set foot in a lot of software industries as a whole. So I'll just give you guys some of the lists, right? So search for extraterrestrial intelligence. Well, we obviously know that's kind of far-fetched, but what you can use NVIDIA computing power for is obviously for a lot of astronomy purposes, right? So just think of mapping of galaxies or doing in-depth research, right? NASA is going to be able to use a lot of this technology for spatial mapping, satellite purposes, everything in that industry as a whole. We also have a lot of infrastructure plays, right? In terms of engineering projects, very complex engineering solutions that may require heavy compute power to give different alternatives as to, infrastructure plays, roads, bridges, stuff like that, right? So a lot of plays in there as well could be good for software. Also in healthcare systems as well, right? In terms of cancer research, right? In terms of molecular and DNA sequencing, which requires a lot of computing power. So all of that industry as well, healthcare industry, and also cybersecurity as well is going to be a very, very big industry for NVIDIA as it seeks to kind of protect its current AI models and other people's AI models, and especially big data from cybersecurity threats, working with a lot of cybersecurity companies, but obviously establishing its own foot in the cybersecurity game as well. So many different things that NVIDIA is going to be able to do attacking the software landscape as of now. So really trying to attack a second sales vertical. When the hardware vertical starts to peak out, they have the burgeoning new software vertical for the company. So very bullish, guys. I hope you guys watch a recap on another channel, perhaps, for people that know a lot more about the intricacies, right, of the GPU markets than maybe someone like myself knows, but I'm just letting you guys know how it's going to translate into the stock's performance, right? We know that the GPU infrastructure ramp could be possibly limited to the next 2 years, but thereafter, what are we waiting for? Keep an eye on the software developments. That's going to be the new S-curve for NVIDIA, in my humble opinion, which is going to open up a whole new suite of revenue for NVIDIA as well, rather than these one-time purchases of these GPU units and an upgrade cycle possibly. There might be delving into the software as a service model where they get monthly recurring revenue, annual recurring revenue from a lot of these major tech companies, right? Very interesting for NVIDIA. So price action off of that bullishness, quite interesting as well. Beautiful daily uptrend, finally breaking above, guys, the 130 psychological. We know it was holding NVIDIA stock in the past. We haven't closed many candles above this and stayed above there for too long. So now if we get a little bit more price appreciation to the upside, going into maybe the 135, 140 levels, that's going to create some space above this 130, guys. I'd like to see a little bit more space created. That way, the bulls have some time to back test this area as support and possibly set another leg higher. So the bulls looking very good, guys. Daily uptrend, no red flags at all. As a matter of fact, any move lower, going to be looking for a higher low. Anything above 115, looking for a daily higher low for further trend continuation. Looking quite good. And look out for NVIDIA, guys. If we close the weekly candle above the 130 mark, we will now have established a brand new weekly uptrend for NVIDIA. And then, of course, we are going to be targeting the all-time highs. If we confirm the weekly uptrend, I will remind you the monthly higher lows are now set in stone. And we may just be looking for that next leg of monthly expansion after consolidating here for the last 3 months worth of time. So we've had a great time on the channel writing some premium on NVIDIA in these lower levels, even trying to do it here as well. And now NVIDIA is just gaining on us. So I wouldn't be chasing this one, but if we get that pullback, I may be tempted to write some short puts in the 119, 115 location. So we'll keep our eyes peeled on this one and take it one day at a time. Now moving into Tesla, give me a brief moment. Tesla not looking too bad either, 1.52% to the upside, looking quite good, right? The bulls are playing defense, guys. Tomorrow is going to be the famed, well, actually not tomorrow, sorry, in 2 days' time. On Thursday, the famed robo-taxi event. So I'd be highly surprised if Tesla gets any major price action before that event, right? Keep an eye on the lows right here, 237. Fracture those lows. Daily downtrend is underway, and keep an eye on this 235. They need to protect 235, guys. It's a relatively big level. If you pull back too much, then you may just end up going into the mid 225s. That is after the robo-taxi event, but tons of space on the weekly, guys. Anything above 204, looking for a weekly higher low for further trend continuation. So if the robo-taxi event is a sell the news event, I don't know what it's going to be. It could be a buy the rumor or buy the news event or sell the news event. I'm just here to give you guys the two outcomes on the technicals, right? If we come down into the short term, 231, 225 is the next target. And obviously, if Tesla goes on a monster rally here after the robo-taxi event, The 265 will be the next likely area where people think of taking some profits, because that is a huge level of resistance currently. And then, of course, earnings coming out next Wednesday. So I will not be playing Tesla prior to the robo-taxi event, but depending on tomorrow's price action on the 9th, I'll tell you guys maybe a few swing trade ideas, whether or not we come down here or whether or not we blast through here. There might be a retest trade opportunity for some long continuation, right? So I'll give you guys those trade options tomorrow if you do want to play them. Now, moving on to the last one, Palantir, guys. What an absolute monster is this stock. Not yet close to the all-time highs, 44, but if we go back in time, you'll see, guys, that we never really closed a candle in that location, right? These are just wicks. We are now above any single candle closes in Palantir's history. So I wouldn't even say that these guys are resistance at all, right? This is just temporary day trading in the mix. So I wouldn't say those are really resistance levels at all whatsoever. And now Palantir bulls, they're just having fun with it at this point, right? Monster rally on Palantir right now. Another daily leg higher. So yesterday, we lost the hourly uptrend. We were thinking that maybe we were in for a little bit more daily consolidation, but that was it, guys. One single day. Daily uptrend simply continues. The new daily higher lows are set with the support area, which used to be resistance 39 to about 38. Daily higher lows are set at new all-time highs. Not new all-time highs, but you get what I mean. New 52-week highs, I guess you can call it, right? So once again, the logic remains the same. When do you know this move is topped out, guys? We're going to see a loss of the hourly, and then you'll know that daily consolidation is underway. Just looking for a higher low, anything above 38.72, looking for that daily higher low for possible further trend continuation. Palantir looking very good, but on the weekly, we are getting quite extended, guys. So in the event, Palantir kind of rolls over and takes a more extended breather, which leads into weekly consolidation. We know they've done it a few times in the past, right? Monster rallies up, consolidation, right? Monster rallies up from here. 2-3 weeks of consolidation, another leg up, consolidation. You guys know, right? Sometimes it takes longer than expected, but obviously when we're in all-time power mode, consolidation, another leg, consolidation, another leg. So now it's been about 4, 5, 6 weeks of rally in a row. I would not be surprised if the consolidation is coming soon, and I will be waiting for it here, guys. If we do consolidate, I'll be looking to pull the trigger potentially on Palantir if we maybe revisit the 36 to 35 location. But now, a little bit expensive for me, and very tough to chase this at the all-time highs currently. But congratulations to all the bulls in this one. You guys must be having a lot of fun right now, and myself included. I do have a lot of long-term Palantir shares, and I'm not really considering selling anyone's. If anything, guys, possibly consider selling covered calls if you're happy with your gains, right? It's not financial advice, but one way you can secure some very fat gains right now is by writing some covered calls on Palantir. The premiums are excessively juicy, and I did the very same thing in the end of last week. I actually have the $40 calls for January if you're interested. I got about $4.30 for them, so very, very happy with that premium, guys. Now, that's pretty much everything in terms of our major stock analysis rundown. Now let's dive into the portfolio, guys. So in terms of the portfolio trades, guys, let's do a very, very brief rundown because I gave a super big one on the Friday session. So today I'll just take you through the new trades that were open since yesterday on the Monday session. So before we get into the ones that I still have, let's go over one of them that I did close, as a matter of fact. So you'll see here that I wrote the Square $63 puts. This was on the top 5 options play video on the Sunday session. We were looking for Square in the low 60s. And as you can see, I wrote the 63s for 33 cents in credit. And we were able to close that today, as a matter of fact, for only 12 cents. So 63% profit, guys, in just one short day of trading. Square was such an easy play, in my opinion. We took it yesterday when the markets were red. 63 was the strike price, and now after today's price action, we were able to close that and reallocate the capital to another play that I'll show you guys as well. The other trade that I closed is a bit below down here. We closed a partial position on our Netflix bull call debit spreads. We opened this one when Netflix was trading around $706 just 2 Thursdays ago. And now that we're coming into our desired target range, we closed one of the positions for a quite nice gain. I'll show you that right here. Netflix partial close, 12% gain in about just under 2 weeks. Very, very decent ROI. There's the closing trade because Interactive Brokers doesn't display it too well. It kind of just, it doesn't put them together, right? It just shows them separately. So I'd rather just show you on the Discord alert so that way it makes more sense. So in terms of the other positions that we do have that we opened for the week, guys, well, we opened the Amazon bull call debit spreads. We actually opened them yesterday when Amazon was down almost 3%. Gave myself a lot of time. January 190s versus the 195s. 3 contracts for about $1.95. Those are slightly up over the course of the day today, but I'm giving myself a lot of time for that Amazon recovery. We also have the Amazon 180 short puts, which is a wheel trade for the week. I also talked about this one on the top 5 options play for the week. This one a little bit more aggressive, but I would not mind being assigned shares of Amazon at the 180, which is why I chose to write it. ATD, we already went over those on the Friday video, so if you want a more detailed view, just go back to the Friday video. Bitcoin, I also showed you guys the Bitcoin trade. That one is still open. CrowdStrike, same thing, just looking for the continued expansion on the CrowdStrike weekly trade. Daily uptrend as well. Weekly uptrend is looking good for some follow through, one of your industry leaders as well. So I gave myself a lot of time on the shares, unlimited time as a matter of fact, and I gave myself a lot of time on the debit spreads as well. February, 300 versus the 310s. So giving myself a lot of time in the event we go through more volatility in the month of October. Still have the long-term Disney play, still have the longer-term Google plays as well. We also still have the Intuit high conviction play that I'm still in. Microsoft as well, we still have that play, even though it's slightly down right now. I might be looking to average in. I want to get Microsoft closer to like 407, 405. Did not touch it even with yesterday's decline, but suffice to say, still very bullish leaning in terms of this position. December expiry, still the longer term Micron trades that are still in effect. We've had those for a few weeks. Not the first time you guys have seen this. Netflix, Nike trades are still on. The new trades, right? We got assigned 300 shares of new last week at $13.50 minus the premium collected right now. Our average cost, our true break-even cost right now on new is sitting at about $13.27. So we are right now, we are right now profitable on this trade if we were to close it right now, but I'm leaving myself until Friday. In the event we get called away, we have the 13.5 covered calls. If we get called away, no problem at all. Simple, easy wheel. We got in last Friday. We might be out by this Friday as well. Very, very simple, right? On a relatively cheap stock share price as well. Moving down, still the NVOs. This is one of the one of the worst call debit spreads that we've put on in the last 3-4 months of trading. Just completely ran down on us, but I'm willing to hold this, guys. Still have time until November. Probably gonna be closing it at a loss, but I want to get at least a little bit of a recapture right here as well. The ON Semiconductor has been a trade that I put on. This was a top 5 options play from the Sunday night video. As you can see, we got it very nice yesterday at when the stock was down about 1%. We have these 67 puts, so right into my support range that I keep talking about, guys. Expected move for the week is 68.18. We're right down below here at about $67. So looking pretty good. Got our 0.5% rule on that one, so not too nervous at all. Oxy moving nicely. Still have the one long call, closed half of it, as I explained to you guys last week. We have the shares that we got assigned at 55. We have the covered calls for 55 this week. We'll see if we get called away. Our average cost on those assigned shares is about 54.16. Now, I also replaced today, I closed the square put and I opened an SMCI. November, this is 45 days away, $36 put for $2.05. That's some pretty good premium, guys. I'll explain to you the logic, right? 205 divided by 36 bucks is about 5.7%. If you were to divide that by roughly 6 weeks worth of time, that's about 1% per week. And we're getting a very good margin of error. So when SMCI was down today, roughly 7% at the lows, that's when I opened the trade because our assignment level is way, way, way below us, right? It's all the way down here at 36, right? And if you remove the $2.05 that we got in premium, our average cost is down here, $33.90, roughly $33.95, call it, which is right in the area of support that I would not mind buying SMCI stock into. So I'm just looking to play the volatility, guys. Got very good returns, and if ever SMCI continues its upward trajectory into earnings and has a good earnings release, the premium will be pulled out of that contract quite quickly. So this one, a very cheap play, $3,600 in exposure, and we're getting a ton of premium upfront with a very wide margin of error. Square, those leap calls are doing fantastic, guys. We still have the hedges, right? SQQQ and all the TLT hedges. The Twilio play is still on game, of course. I explained that one last Friday. If you want the thesis behind it, go to last Friday's video towards the end. And we still have the Waste Management 210 versus 220 bull call debit spread. A lot of time on this, guys. It's for January. Just looking for this one to expand from its range towards the top end of the range, 215, 220. I'll probably look to close this position right there. That's everything in terms of the portfolio recap. And we haven't covered this one in a while, right? Our disaster portfolio, right? These are all the companies that I picked up about a month and a half ago, where I said that I would take $1,000 put it into 20 companies that have been absolutely destroyed over the past 2 years worth of trading and see whether or not they can actually beat the S&P 500. Well, I'm kind of happy to report, guys, that for this portfolio right now, we are indeed, since we started it, we are outperforming the S&P 500 by a fairly decent margin, right? This portfolio is about 7.5%. S&P 500 is up about 2%. So not all that bad, right? Some of the largest gains in the portfolio so far have to probably be BABA, Win, CCL, Helen of Troy, Caesars, Love, Southwest Airlines, PayPal. And you can see the gains here across the boards, right? But obviously it's not going to be crazy gains because we only put $50 a pop, equal weighting across all these stocks. Some of your worst performers, Dollar General down 32% from where I bought them. Rivian, I only put $9 in this one. It was like an extra $9 that I had in cash. So I figured, you know what? Let me just buy one share of Rivian, right? Nike down about 3%. But for the most part, a lot of these stocks have performed quite well. Only just a few, right? With Walgreens down as well. So all in all, happy with the performance, guys. I will only ever add to this portfolio if we go into a hard landing, deep form recession. S&P's down 20%, QQQ's down 30%. I will throw an extra $1,000 equal weight into all these companies and then see where we end up in roughly a year, 2 years worth of time. And we're going to it's just a test, right? Can we outperform the S&P 500 by buying companies that have been absolutely crushed to time machine prices? A lot of these companies, when I bought them, they were at prices you could have not found since 2017, 2018, 2016, 2015, right? Absolutely destroyed. So nice to see that a lot of them are decently off of the lows at which we bought them. So a little bit of an experiment that we have going on there. That's pretty much everything I had for you guys in terms of today's update. So hopefully you guys enjoyed the video. If you did, consider dropping a like on the video. Would appreciate it for the growth of the channel. Also consider subscribing if you're new. Would love to see you back. We do these every Monday through Friday after the close. And lastly, guys, if you have any questions at all, always feel free to leave them down below in the comment section. Anything you want me to look at a specific stock, technical analysis, second opinion on an options play, macroeconomic discussion, whatever you guys want, I usually answer within the first 24 hours. And if you guys want to get my trade alerts in real time, have access to our Monday through Friday live streams, all my trade idea setups, all the chats that we do together, ask me anything all throughout the day, and a lot more, some of our private member videos as well. Well, guys, the link is always down below in the description to the Discord. So if you're interested, hopefully I'll see you in there soon. And that's pretty much it for me, guys. Take care. Have a good day tomorrow. See you after the close, and peace.